Hi everyone, welcome to another episode of Invest Power. Today I want to touch on a little bit about cash flow versus capital growth. Now I know traditionally it is very difficult to get both in residential properties, and that's why usually as we do the initial acquisition, you can either focus on a property that will give you the cash flow, in other words really good rental return, or you can look at purchasing closer to CBD, for example, in order to maximize the chance of capital growth. Can you do both at the same time? Because I've always been asked that, from investors, if you can actually achieve both at the same time, wouldn't that be wonderful? The answer is yes. You probably need to think about a couple of things during your acquisition. And today I will give you 3 tips about how you could potentially do that at your or during your acquisition, so that you can plan ahead on how you can potentially achieve capital growth and yield at the same time. Okay, so the first strategy that you could do in order to actually get capital gain and cash flow is look at acquiring a site that you can build a granny flat on. So that's the granny flat strategy, which is quite commonly adopted during the Sydney boom in 2015, 2016. A lot of the Sydney investors, as they acquire out sites out in the West, they look at acquiring a site that allows you to build a granny flat at the back or an auxiliary building. So in these type of scenarios, in my opinion, you want to actually look at, because of the capital growth component, you want to actually look at as close to CBD or whatever element that you're thinking of in order to be able to get the maximum capital growth, and then purchase a site that allows you to be able to manually add value. In other words, building the granny flat to increase the cash flow. So it's a 2-step process. First thing is you need to actually acquire the site. And during acquisition of the site, you need to look at doing due diligence on whether this site allows you to build a granny flat. So whether it's subject to council approval, like always, they always put STCA. And then if that's allowed, and then essentially acquire that site first. Second step is then look at engaging a builder that allows you to build a granny flat. So that will allow you, 1, if the location is good, then you'll get the CG. And 2, once you build a granny flat, they'll give you the cash flow. So that'd be really helpful from a long-term hold perspective. So that's strategy number 1. Okay, the second strategy that you could potentially deploy is to be able to build something or purchase something that has a dual living type of scenario. So second one would be dual living. So you notice in a lot of my videos, the ones that I purchased in Logan, for example, you can build downstairs within a high set. That's definitely a dual living type of scenario. Another common one is, for example, like a lot of the new apartment that's being built right now, they got 2 entries. If you think of it like a duplex in Sydney terms, a duplex is a great example of a dual living, except in this case, it's basically attached. So 2 doors leading to 2 separate dwellings that's attached to each other. In other words, got common wall. Or even without common wall. If it's without common wall, then it's slightly like the granny flat type of concept. But dual living type of scenario is, again, that's something that you can look at. And again, you need to look at sites that is close to, for example, CBD, close to big employment hubs, or big infrastructure spend that's upcoming, and that's going to allow you to be able to capitalize on the capital growth while maintaining the cash flow. So in this scenario, what you can do is, 1, you could potentially purchase land that is, and then build the dual living yourself. Or 2, purchase land with an existing dwelling, demolish it, and then build the dual living type of configuration. So and then another strategy that you could adopt in order to be able to capitalize on capital growth and cash flow is look at sites that's got subdivision potential. So subdivision. I'm a big fan of these sites, to be honest myself. These subdivision sites, a lot of times, you can either just cut off the land, think of it like in a very simple analogy, cut off the land in the back part or a certain portion of the land, and then sell that off to someone else so that they can do the build. You take the profit, you pay off whatever's currently on your mortgage, and then the property will be cash flow because you pay down the loan, and then the rental income that comes in will be able to maintain and support itself while you wait for that capital growth. So that's one way. The other one is potentially on a site that has already got 2 properties. So in other words, 2 properties on a site under single title. So I've seen one recently, actually, 2 properties, so that's what we call like 2 and 2A, but they're actually on the same parcel of land. So what you can do in that scenario is if it's got 2 separate frontages, and check with council on this to see whether you can do a clean subdivision in the middle. So that way, essentially you're buying it as one title, but because you subdivided it, and then you can sell off one, or you don't even need to sell off the other one. If you want, you can actually keep both. And that basically comes back to the dual living type of scenario, because you've got 2 income streams that's coming in and be able to maintain and give you a better rental yield while you wait for that capital growth. Okay, so subdividable blocks is good to have, definitely, in order to improve on a cash flow perspective at a later stage. Okay, so you'll notice that I talked a lot about improving on cash flow in all these 3 instances. So you might be asking, well, what about capital growth? Okay, well, capital growth in this scenario, I mean, in my opinion, if you want to just keep it dumb and simple, just purchase somewhere that is close to CBD, as close to CBD as you can. And that's why I stress the importance of actually buying a piece of land that is virtually close to CBD or close to some sort of demand that people want to live there, whether that's opportunity, whether that's employment, whether that's infrastructure, whether, for example, that's the upcoming university like Petrie in Southeast Queensland, or the Badger's Creek Airport that's upcoming in Sydney as well. So if you can secure land that is in these type of upcoming demand areas and be able to deploy one of these strategies, be able to improve cash flow, then I think you can actually achieve a win-win in both capital gain and cash flow perspective. So that's my secret, is basically to look at parcel of land as close to CBD as possible and secure as big as you can, obviously with potential of doing one of these strategies, so that later on you've got different type of value adds that you can do in order to make it easier for you to hold long term. And we know property investment is all about long term, and that's why I'm saying in this case the simplest method is just purchase land and as much land component as you can, as close to CBD as you can, and then deploy these strategies. Now, if we do want to just solely focus on a capital growth type of perspective, in other words, what sort of things can you do to add value so that you can boost that capital growth and generate equity, that's a separate discussion which I'll do another video on another day. But for now, if you like this video, make sure that you like this, subscribe, and let me know if you got any questions by commenting below. Otherwise, I'll see you in next week's Invest Power episode.